Yo, yo, yo. Welcome back to the channel. Wait, let me do that again. Yo, yo, yo. Welcome back to the channel. I'm such a good YouTuber, dude. I know exactly how to do my intros. What is up, everybody? Oh my, what is occurring? A price rally. A price rally in the markets, I say. The bear market is over because of this falling wedge. No. we're gonna talk about that. Um, what a wild day in the markets. You've broken this downtrend and you actually you had an absolutely crazy price rally. I know that yesterday in the video we were talking about the potential for this falling wedge that was coming up out of here. It was even in the thumbnail if you go back and look. And the market broke down out of this rising wedge that we charted out here, and then you just continued your price rally on up. A lot of strength in this move here, and you know, as we said, you had the 3750 level that we were watching here. You had some consolidation occur right around there on ES1 here, and once you confirmed over that for market open, you just jetted off and had a crazy price rally from there. So a lot of strength in this move overall. So let's talk about levels where we could see potential for reversal. I told you guys what I was expecting was if you get confirmation above this 3750 level, which obviously is the top of this local accumulation range here now, then that is your overall sign of strength, and you should be pressing up towards the long-term midline, right? So zooming out here, this midline is drawn from way back here. You have this consistent resistance trend that occurred here in May to June, early June, and then also it acted as a key trading level back here in September, early September, as well as late September. So I am expecting that you come up and you have a challenge here. Now, we said that the type of move that we would most likely be expecting in this circumstance is a similar move to what you saw back here in June in the interaction with this midline. I'm not sold on the idea that the market has quite enough strength to be breaking through this midline just yet. So I would expect that you have some sort of range-bound activity that occurs up here whenever you get into this range. And we are a little bit more vertical than we were probably expecting. I mean, you're 3% up on the market. I believe yesterday you were up 2 or 3% as well. So obviously you're having a very explosive reaction to this accumulation, but you should be coming up on resistance here soon. We can do inverse Fibonacci as well to start to locate some of these key levels. You can see that off of this, and I would rather draw it down here really, off of this local price rally, you have broken through your golden pocket, going up to the 707, which is at 38.19 on futures here. You're going to start to see a little bit of a slowdown in price here, but I do think it would be more sideways consolidation. I believe that the goal here now is off of this sign of strength to bleed bears out. It's possible that you could pull back down to 3750 and start testing here, but I think that it's more likely that you have some sideways consolidation over the course of the next few days, bleed out some options holders, people who are overly bullish and people who are overly bearish, and then you probably have more upside price action before maybe you come back and test this 3750 level or so. And then from there, we'll get another read on the market and see what we think. If we see continuation through there, again, you know, you haven't had really strong volume here, and I did say this 3750 level was where you would want to see some really strong volume come in, and you can see that as a result of that lack of volume, although these price moves are explosive, you can see that you're already starting to lose some of that extreme verticality that you had yesterday, and it's starting to fade out a little bit, right? You can see that you're starting price is starting to round out and get a little bit more boring here. So I do expect that trend to continue. I don't necessarily think that I definitely don't think that you're going to crash through 3750 at this point. I think that you've confirmed above that level, but I wouldn't be surprised by a retest in the next few trading sessions. I do think that overall you shouldn't see as much range as you have the past 2 trading days. I'm expecting it to temper down a little bit, have one of those 0.5%, 1% to either direction type days, if that. So again, I'm expecting some consolidation here. You could see some continuation to the upside, but just look for a break to either side of one of these trends. And that's the major stuff as far as the market goes. Yeah, I mean, overall, it just it looks like a healthy build-up and consolidation here. You broke this trend line, and you should be coming up to test this midline. I mean, I suppose it's possible to get your test tomorrow. How much of a percentage move from here would that be? Yeah, 2%. I think that's a little too optimistic to be getting that test tomorrow. It's completely possible. It would really hurt bears a lot if that was to occur, so that would make sense because of all that put premium that was down there at the bottom. But I just think that I think that especially on an expiry day like tomorrow, the market makers would benefit more from some sideways action in chewing up premium from either side because of all this volatility that's occurred the past few days. So that's my opinion, and what I'm seeing from a technical standpoint, and combining it with how market makers may want to operate within the market. I could see you gapping up, perhaps. That's another option. You could gap up, especially specifically on SPY. You could see a gap up so that they could absorb a lot of that implied volatility. And then you see that kind of sideways action occur. So that it's some sort of sideways during the session tomorrow is what I'm expecting. There was another interesting Fibonacci that I do want to call out here. If you draw from the bottom of this move, I believe here, to the top of the 43.27 rally, you can see that this 1.272 Fibonacci extension level was actually the ultimate support. And look, if I adjust it a little bit more, it's probably even more perfect. But it was pretty much perfectly used as support for the causation of this rally and what ultimately played out as a spring for this rally. So I would add this to your chart and at least be paying attention to it, because you can see here historically these levels are very very used. You can see this 236 had a perfect retracement off of it. This 0.5 had a perfect bounce off of it. You traded within this golden range here a lot, within the 707 and 786. And you see some correlation here where, like we said, you kind of go sideways a little bit, and then you could consolidate around this midline, which correlates with this 786, 3850 level, right? So I would just add this and at least be peeking at it, right? Taking it on and off of your chart just to pay attention to some of those levels, because I would imagine that wherever this rally does end up turning around, at least temporarily, it will be somewhere based around this this Fibonacci retracement that we have drawn here. So that's pretty much the video. Not much else to talk about. Let's go look at AMC, because I know that AMC had a big day today. Well, I guess we could look at the pair here. I really don't I don't know why it's like this. I like the old way. I guess I'm old school, or like I'm like an angry old man or something. But I like the old way of this, where I could just like, just like open a chart, like search. See, look, like what is going on? These guys. What's happening? So yeah, you had almost 14% on AMC today. Oh, it's not on log. That's a big problem. See what's going on in TradingView, and my computer's like glitching around. It must be overheating or something. So much noise on my charts. Holy shit. All right, let's see what's going on here. I know that I saw Rico post a chart That was like a pretty interesting chart that was calling for some upside today, and that's what you got on Ape. Let's see here. Perhaps a downtrend. This chart is so is so aggravating, the chart Ape right now. I hate the place that this chart is at now, because you just don't have enough detail and price to be able to chart this thing, but that's part of the game. So you do have this this like previous support trend that you broke through. You're going to be testing here soon, and you might have already tested it if I draw it a little bit better here. No, not really. So yeah, you probably should be testing this tomorrow. Let's zoom in here and kind of see what this price action looks like on Ape. I mean, yeah, definitely an accumulative look to this bottom here. By the way, a while back, somebody commented on one of my videos and was like, "I'm so tired of hearing YouTubers talk about accumulation. How long can you accumulate for? You know, try and do it yourself. You just can't buy every day." And so I just want to clarify here for a second that when you're referring to accumulation can be as local as the 1 second chart. Okay, so you can see a Wyckofian sort of accumulation occurring. I mean, just like here, you can see that you had a local accumulation, or at least a reaccumulation, occur here. You broke out, you had a distribution that occurred, you retested, and then you broke out again, right? So these algorithms, this is the way that they trade. They trade in accumulations, reaccumulations, and distributions. So you see a distribution here, an accumulation here, a distribution here, an accumulation here. And they're constantly checking and testing for liquidity at these different levels. And so I guess when you are looking at it here on the larger time frame, you can see back here from April to like, I don't know, like July was a big accumulation range, right? And then you had this distribution range play out. This distribution back here after this accumulation here, right? And like this really was like a redistribution sort of look here, which is a little bit more complex, and it remains to be seen what's going to end up happening as a result of this. But we're just giving, when you're hearing those words, accumulation and distribution, at least when I say them, you're hearing it on a local time frame, and then perhaps you're you know, you could have a more macro accumulation that's occurring here, right? But to finalize what I'm saying here is that okay, these institutions have enough money to buy, like BlackRock has enough cash on hand to buy AMC outright, right? So like the market cap of AMC, and listen, I know what they can't buy it outright because there's naked. Just bear with me. Pretend for just a moment that there's not a short in the world, okay? If they wanted to buy the company, they could buy it outright, right? At its current valuation. So, but the goal here is not owning something. The goal here is to make money. That's all they really care about, is money or increased liquidity, right? So what they do is they accumulate some shares. Like, they don't just go all in on their position, because if they were like, we want to own $4 billion worth of AMC stock, they would pump the price ridiculously in that process, trying to buy it all at once. So they have to buy a little bit at a time, which is going to cause a price rally, and then they'll sell some to cause the price to go back down, and then buy some more. If they're accumulating, depending on the time frame that you're looking at, right? Because this is happening over the course of different time frames, like I showed you. They are accumulating and distributing with the goal of eventually having more shares. Or if you're in a macro distribution, like you could see if you look at the SPY chart example here, right? Like the goal up here was distribution, big time, right? But within that distribution, all the way up here, you had an accumulation. You had an accumulation here. You had a quick accumulation here. So I hope I'm illustrating this well, and I know it's not perfect, but if you understand what I'm trying to say here is that overall they're pumping the price slightly so that they can sell a little bit at a time, so that then they can pump the price a little bit more and sell a little bit more expensive. And their goal is to get an average price out, because they can't I should look at the camera, not at myself. That's weird. I should minimize this. And that. Oh my goodness, and that. So they are creating an average. It's like a cost basis, right? So they're creating an average price that they own at the bottom. They could do it from the short side as well, and it's a little bit more complicated when you get into the derivatives and everything like that. I'm just trying to simplify the methodology for you. Like they are like, yeah, I think the highest we can sell SPY for is $480. Okay, so we're done. Right now, there's no liquidity up there for us. We are going to cause a sell-off. We're going to sell, but we're not going to sell everything at once. And then when we get back down here, we're going to buy in a little bit more, not with the intention of holding it for the long term, but with the intention of being able to sell it for more expensive, right? So that then our cost basis and our average is better over the course of time, because we even got to price rally up to 430 back here when everybody knew that fundamentally we shouldn't have been at $430, right? That is the game that they're playing. They're not like you and I, where you can't, they have unlimited access. They have unlimited access to liquidity, okay? They control the market. Composite man. That's the way that I view the market, okay? So hopefully that lets you a little bit into my head a little bit. What's in your head? Hopefully you gained something from this video, and I got to go to the gym. So I'll see you next time. Peace out, brethren.